Hey, are you looking to make some cash in this bear market? If so, stay tuned. If buying shares is the only way you know how to be involved in the markets, well then you're just asking for a spanking. So I'm going to be gifting you in this video on the top 3 ways to profit in a bear market. So let's start with number 1. The number 1 way, in my opinion, is debit spreads. So let's do an example of a debit spread. Let's go over to Target and let's trade some Target options. Let's say you think Target, TGT stock, is going to be at a certain level, but not go too far past a certain level. I see about $230 a share. That's my resistance point. I don't think Target's going to go too much past that point. Let's guess how far we do think Target will go. Let's say I do think Target will go, past 225. So we think it's going to go to 225 and up to 230. It can go past 230, but I don't think it's going to go much past 230. Let's go right up over here. We would buy the 225 strike call. And then what? That costs $282. That's expensive. I'm cheap. I want to sell the 230 strike call to make that a little bit cheaper. Hey, that's a little bit better of a deal. Here we go. Now, this only costs $111. My max loss is $111. My max profit is $389. And that is if Target closes at or above 230 by the end of the week. So, debit spreads, a lot cheaper way to be capital efficient, and I don't have to risk my shares overnight. The total cost is the total loss. So you can also do it on the put side. Let's say I'm bearish Target. For whatever reason, everybody decided to shop at Walmart. So everybody's shopping at Walmart, Target tanks on its earnings. Well, where do I think Target's going to go based off this chart? Okay, based off this chart, let's say I think Target's going to fill this old gap down here at 200. So I don't think it's going to go much past 200, but I think it can get to 200. Where do I think Target can get to? Well, let's say about 205. Guess what? I'm going to buy the 205 strike put. That costs $283. I'm cheap. I don't want to lose $283. I only want to lose a little bit less. I only want to lose $100. Let's sell the 200 strike call. Put. Let's sell the 200 strike put. Max loss of $100. Max profit of $400. Boom. Debit spreads. Cheap and effective way. Stops don't get wicked. No shenanigans. You're either going to get the max profit, the max loss, or something in between if the stock price closes somewhere in between. So now that you just received that excellent explanation on debit spreads, I'm going to put on these glasses here because we're leveling up in our knowledge. So the next strategy that's working really well for me in this bear market are butterflies. And I'm doing SPY Monday, Wednesday, Friday butterflies. Right here is actually a butterfly that I have for the 20th of May, and it only costs me $50. That's pretty cheap, considering this trade can turn into a credit of $400. So what really is a butterfly? Well, it's a debit spread and a credit spread. So a credit spread, really just the opposite of a debit spread. You're selling an option that you think the stock will stay away from, and you're buying a strike price to protect. So let's take an example of tomorrow on the SPY. So let's say that based on your professional technical analysis on the SPY, you see that the SPY can get above 410, but not too far past 413. In fact, you're so confident that SPY is not going to go past 413 that you actually plan on selling 2 of those options. So remember earlier I was saying butterfly is a debit spread and a credit spread. Well, this is the debit spread portion of this. This in and of itself, loss of $100, max profit of $200. Cool, cool, cool. That's a decent trade, but what if I don't want to spend $100? I'm cheap. I want to keep my trading account cost efficient. Well, we buy the 410, sell the 413. I actually need to go ahead and buy the 416 to protect. But I'm actually going to adjust now the ratios. I want to sell 2 of the 413 strike calls. So let's sell 2 of those and look at that. Hey, I just reduced my cost by almost 50%. So now look at this. I want SPY above 410 up to the 413 but not too far past the 413, as the loss can actually occur if it goes past 413. So on our earlier debit spread example, we didn't mind if the stock price went past the short strike. But in this butterfly example, I don't want it to go too far past that 413. So here's our 410 level. Here's our 413. If SPY goes and shoots and moons tomorrow, hey, that 413, that short strike is going to start being worth a lot. And since we're short it, we're going to start losing money. Our 410 call will be cool, but that's why we need that protective call on that butterfly. So you can do butterflies on Monday, Wednesday, Friday. And I like that because it's at expiration. So if it's short dated in time, most people are just buying calls if they're bullish, when really they should be doing short dated call butterflies most of the time. Similarly to the downside, if let's say I was bearish the SPY and I think that the SPY is going to come back down to, 402 down to 400. Let's just say it's really going to get spanked tomorrow. So let's just see, okay, let's say I think the SPY, let's say I don't think the SPY is going to go much lower than 402 by tomorrow. Well, let's buy, let's say, what do I think the SPY can get to? Let's buy like the 404 strike put. So let's buy the 404 strike put, sell 2 of the 402 strike puts. So right now, this is just a debit spread, max profit of 162, max loss of itty bitty $38. Basically, the market's saying, yeah, it's not likely that SPY is going to sell off to that 402 by tomorrow. But let's buy another put to protect. And now let's adjust our ratios. As you can see, Robinhood makes the options graphs really nice and visually appealing to see. But on any broker, it really shouldn't matter too much. And let's sell 2 of the 402 put. Look at this. Look at this itty bitty trade. These butterflies are pretty cool because if you can pin the tail on the donkey and snipe the range that the market's likely to close at by the end of the day, look at this one. $12 can turn into 200 if SPY closes right at that 402 strike price. You don't want it to sell off too much though, because if it sells off underneath 400, you lose your 12 bucks. If it stays right at 402 though, you make $188. If SPY doesn't sell off enough, guess what? You still lose your $12. So butterflies, Monday, Wednesday, Friday, whatever my opinion is on the SPY, ask me about it at Weenie Trades Live. Say, hey, Weenie, what's your thoughts on the SPY? And I'll say, hey, my butterfly is this. And that should be enough said. So how do I construct that May 20th butterfly? Well, guess what? Let's go over to May 20th. Let's see what we got over here. May 20th, if we go back to at the money, as you can see on the call side, oh, look at this. Buy the 412, sell 2 of the 416, and buy the 420. Guess where I got that? Oh, guess what? Go check out Backpack Trader. Romulus literally told us what is the likely resistance on the SPY in this video. So we're kind of just telling you what's most likely going to happen, and you can set up these trade setups based off all this free information. Isn't that amazing? That's how we can profit in a bear market. Listen, the third best way to make money in a bear market is to not lose money. So sit in cash. And the reason why I say you should sit in cash is because your analysis can be correct, but the market can still take you out and you can still lose money. You know, maybe you're going long Moderna and your stop gets wicked to the penny and then it goes and hits your target. Maybe Beyond Meat just is not the stock for you and you really shouldn't be a vegan. Maybe Beyond Meat just, hitting those stops. I would have been just better off just watching it drop instead of trading it. Either way, what I'm trying to say is less trades is better. Day trading's a little bit weird. Swing trading's good. Butterflies are good. Debit spreads are good. And becoming a member is good. So be sure to check out the memberships at Weenie Trades Live. We're giving trade alerts, like this hood strike put, when I'm entering, when I'm exiting. Go ahead and check the validity of all the past videos as well. If you're a member, believe it could be about 85 to 90% accuracy on those trade setups with phenomenal risk to reward. So a quick example of that hood trade, I'm putting out the alert on hood. Hey, going short hood by buying that put option right there at about 1060. And today covering at about 955, 960. I even gave that one for free at Weenie Trades LLC. Go check out the last video. Those that stayed to the end were able to get that nice good hood put. Hood put. Sounds pretty cool. There's also other cool trades like shorting Amazon before its earnings. I rarely do earnings trades. However, this was one of them that called for it. Amazon down over there, yeah, about 30% since that move. Maybe you enjoyed the IWM short trade from the breakdown point of about 200. Maybe you enjoyed the measured move of about 169. And it could drop and test this former breakout area on the IWM of about $170 a share. So based off these factors, I am bearish on the IWM. I'm expecting it to most likely drop. Maybe you enjoyed the free analysis from the SPY 385 being the dip buy. 410 or SPY down to about 385. So that's the SPY. So these can come to members, and it's just a way to profit in a bear market. If not, hit the like button. I'll see you in the comments below. And I'll see you guys in the next one. Oh, also check out the options course. I have an options course, so if you enjoyed this presentation and want to learn much more in depth and how to profit in any market environment, go check out the link in the description. Peace.
Thanks for tuning in.